our shirts too similarly colored?
I don't think so. This is the pastel club right here. Hey guys, I'm back with you with actually a really special interview for me because this is my good friend Travis DeVitt.
What's up, guys?
And Travis is actually one of the smartest guys I know, if not the smartest guy I know. He's 30 years old, has managed literally hundreds of millions of dollars through his hedge funds. And I just wanted to bring him on the channel to kind of show you guys his world. You know, there's this kind of whole elusive world of institutional investing and trading. And, you know, I'm an individual trader and I also trade with some smaller hedge funds. But Travis is one of those guys that's behind the scenes that's really making big moves. Thanks for being here, man.
Absolutely, man. Thanks for having me.
Absolutely. So I guess just start off by telling everybody like where you came from, what you've done, where you're headed.
Yeah. So it's been a fun, interesting journey. You know, I probably look like I'm 24, but I've been doing this for a little while longer. I'm 30 years old, but I was in the fund world for about 8 or 9 years of that. You know, growing up, I was I don't even think I knew the word investing until I was like 16 years old, because I came from kind of a family that was living paycheck to paycheck. I was never really involved in it, but kind of got into the markets kind of like you, similarly, like on the trading side when I first started, and was just super interested in the stock market and just like how dynamic and fast paced and interesting it was, and like it blew my mind that people could make, you know, $100 million or even $1 million in a year trading. You know, it was just mind blowing to me. So that was kind of cool. So you know, I decided pretty early on like investing was definitely my thing. Like I think I was even investing like my student loan money, like, you know, just like gambling my money for books, or not gambling, but, you know, trying to use that to invest. That was my first foray into the markets. But as I got deeper into it, you know, obviously like did some legitimate internships, went up to New York, worked on Wall Street for a little bit. And then coming out of college, I started working for a hedge fund as an analyst for a couple years. And then I got back to Austin, where I started working for a really great fund here that I kind of helped, you know, really see like sort of its big growth phase years over the last 6 years.
So for anybody who's like brand new to your world, can you give us just like explain like we're five, like what's a hedge fund, what's an analyst, and what the hell have you done, and how were you able to manage hundreds of millions of dollars?
Yeah. So really, you know, it wasn't specifically me, I should say. Like it was a team of guys that I was a part of. There were roughly 6 of us on the team at the fund, and you know, in our world, there's a lot of ways to skin a cat in the markets, as you know, right? There's a lot of different ways to make money, but our sort of mentality and mindset was that we were fundamentally driven. So we were focused on earnings, we were focused on you know, turnarounds, we were focused on like company fundamentals and really taking positions. So we would you know, invest this portfolio that we had, and we would typically invest in a stock for between, say, 3 and 18 months. So that was sort of our average holding period, probably.
So you were looking for like undervalued companies or overvalued companies, and you were looking for longer term moves, right?
Yeah, absolutely. Yeah, we were looking for stuff that took a little bit longer to play out, stuff that the market was missing. Because, you know, people say the market's efficient. It's efficient at like really incorporating well-known information. It's very fast and efficient at that, but it's less efficient at figuring out things that are more complicated. So like 12 months from now, you know, is this retail chain going to turn around? You know, are they going to be able to grow their sales? You know, 12 months from now, you know, is Tesla going to be able to, you know, come out with their huge battery factory and bring it up to speed operationally and get those battery costs down so they can do their big Gen 3 model, right? So it's really figuring out like what the future of the business looks like. I mean, basically at the end of the day, we're like, you know, we're trying to predict the future, which can be a really hard thing to do.
Well, and it's so crazy because coming from, you know, my expertise, which is day trading, like a long trade for me is 2 days. My average trade is 15 minutes. So, and I get emails all the time. Like people say, well, Chris, what do you think of XYZ company? Or what do you think of Tesla or this? Or what do you think of all the pot stocks? Like, I don't know. I trade them. I don't know the fundamentals, you know, earnings and all this stuff. And I caution anybody who's in the markets. I say, look, there are guys like Travis out there that have a ton of expertise and a lot of just power behind them, resources and brain power, and they can do this stuff really, really well, where if it's just you kind of investing on your own and you have limited resources, these are the guys you're competing against, right? So
and we have, in a lot of cases, funds like ours had a direct line to management, and that's not to say we were getting non-public information. We certainly weren't. We have compliance personnel in place to make sure that didn't happen. But we could call up the CFO and we could ask about the strategy that he's already articulated publicly, and we can figure out from conversations with executives probably pieces of information that the average investor couldn't necessarily piece together because they don't have that access. And so it is interesting, but at the same time, like you see stocks like that are moved by retail investors that move against institutional guys, especially on the short side. Like that's a really difficult thing to fight. Like I knew a lot of guys that were short, institutional guys that are short the pot stocks, right, and it blew up in their face. And so it's kind of interesting to see that push-pull, but at any given time, you're definitely as an individual, somewhat outmatched by the sheer volume and ability for those institutions to invest so much dollars in finding the experts and talking to management and doing all those things. Like if I were to try to replicate what we did at the fund as an individual, it would be really, really difficult.
So what was it like being like a kid, basically in your young to mid 20s, calling CFOs and basically drilling them, right? Saying, listen, man, what's your strategy? Are you really, what were those conversations like?
It's funny, early on, the very first few months that I was doing it, I was terrified because I didn't really know what I was doing, right? I mean, I had studied finance and done corporate finance, and I knew how to put together an Excel model and things like that, but actually breaking down a business, you really get the sense for how businesses are run and how the corporate world works just by experience. And so it takes a few years to really get to that level where you feel like, okay, I've seen this before. I can understand this pattern. I know how this works. And it's incredible. That's one of the incredible benefits of the job I was doing, was getting to sit across the table from really, really brilliant CEOs and CFOs. That being said, all of those guys are people just like you and I. They have days where they don't get enough sleep. They have schedules to maintain. They have they're not always on top of every detail. They're not always strategy-wise even doing the right things. You can see that in the markets. You can see when companies fail, and it happens often that there are very well-educated people out there that just chose the wrong strategy or chose the wrong path. And so as a young guy, and even as an individual investor, there are times where you may be smarter about that situation than the guys that are running it. And sometimes
it's crazy to think, right? You're sitting on the other line, and you're like, man, I could tell these guys what to do to fix their business. But
Yeah. And sometimes it's just institutional stubbornness, or it's the same thing that we hear too about big companies not being able to innovate. They get these monolithic, huge structures in place, and it's hard. If you're the company the size of Dell or Google, it's hard to get new initiatives through. It's hard for them to be nimble, and that's why the world of startups exists, because there's constant disruption opportunity. As companies get larger, it gets more difficult to manage that and to manage those behemoths.
Speaking of startups, Travis and I actually met through the local angel investing network, CTAN, Central Texas Angel Networks, and Travis actually has taken the lead on some investments, and maybe just talk about how you got into angel investing and what you think angel investing is for you and where you're headed with it.
Yeah, absolutely. Yeah, angel investing is a really exciting thing that both you and I have been involved in, and the reason that I really got involved with it personally, with my own personal investments, was because I could see that a lot of the great growth companies are staying private longer. So, in the 90s, you could invest in companies like Intel and Dell and Microsoft, when they were still kind of earlier in their growth phases. But today, for various reasons, companies are staying private longer. And so companies like Dropbox and Facebook and Twitter and things like that, they don't go public until they're, at a 10 or $20 billion valuation, or even higher in Facebook's case. And so you don't get access to those investing opportunities early on when there's still growth, and so, or at least not as much growth. And so my whole theory was, hey, look, I want to be able to find these companies. I want to be able to find those 10x, 20x possible investments. And so that's why I sort of started looking at angel investing and investing in startups. And it's a really interesting world, because there is this potential to invest in these like really high growth, great companies, but it's also littered with failures. So like, you've heard the rates, like, 8 or 9 out of 10 startups fail, right? So you almost have to build a portfolio and really not only pick smartly and choose smartly with the investments you do make, but you have to assume that a significant number of your investments are going to fail. Yeah. Which is a very scary thing, and but it's also it's interesting. You get to work with entrepreneurs, which is cool. Absolutely, man. I mean, that's why I think I got into it, is because I just love working with entrepreneurs, and like you said, I mean, you get the early crack at the possible 10, 20x companies. Maybe talk a little bit about like what kind of investments you've made so far, what you look for in a good startup investment. I have my thesis, and I think I'm a little. I guess I play scared in the angel space. Like I haven't been just out there throwing money around because I'm really looking to nail it. But I think you have a pretty good approach. What's the thought process that you go through when you're looking at a startup? Yeah, and nothing. There's no way to like formulaically pick winners, obviously, or someone would have figured that out. But there's a couple big things that sort of everyone looks for, right? They look for a really great team. So that typically will mean someone who's either started a company before or has like really sharp domain expertise. So like if someone's going to go start a payments company, you'd love to see that they used to work at PayPal in a high, a high capacity. So you look at the team and you say, do they have expertise and have they done this before? And then you look at traction. Do they already have a product out? And is that product already gaining traction with their users or their customers? Is it already selling? Are they already bringing revenue in the door? Right. Mm-hmm. So you look at team, you look at traction, you look at the market size, you look at the idea specifically. Like, okay, how big can this business be? And so you say, can this be another Facebook where it can grow to be a multi-billion-dollar company? Can you get millions of people, millions of customers or users using it? And so those are probably the three biggest areas. And the thing is, like, you'll never find that unicorn. You'll never find like everything that's perfect about the company and get it at a great valuation. So you'll never find the experienced team with domain expertise looking at a huge, great, big idea that no one's ever done before, that there's no competitors. And that you can get for pennies on the dollar. Exactly, yeah. So like usually those guys that have sold companies before, like they are already connected to venture capitalists. They already have people funding their companies, and so you typically look for two out of three, or three out of if your criteria is 4 things, you look for 3 out of the 4, or if your criteria is 3 things, you look for 2 out of the 3. You know that you're not going to find all of them in one package. It'd be really unusual to see that, but you try to get most of the way there. So for me, like, I'm willing to bet on maybe a little bit more of an inexperienced team if I think they're sharp, smart guys, and I think they've done their homework and they are smart about the space. And it's a really big space where there's a lot of room for there to be multiple winners or big winners. Mm-hmm. So just to give people like kind of my spin on the angel space and what angel investing is, it's like if you start a company, the first thing you're going to do is look at your own funds, right? And say, okay, I've got, $5,000 in the bank or $5 million in the bank, whatever you have. You look at that first. And then you go to friends, families, and fools, right? Basically people that will just loan you money or give you money to start up. Kind of the next step from there, in my opinion, is angel investing. Do you agree with that? Yeah. So it's like individual accredited investors who are supposed to know what the hell they're doing, that will actually cut checks for anywhere from $25,000 to $5 million. Would you say that's a good range? Yeah. So 5 million would definitely be on the high side. Yeah, and it's probably growing because of the VC space overlap, right? Or yeah. The average check size for angels is probably between 25 and 50K is what you just would, for one angel to write a check. Yeah. So, but most companies I think would probably raise between 100,000 and 700,000 in total angel capital. Yeah. And I think that's why angel networks like CTAN are so popular, is because when you have that kind of think tank and then you have the aggregated, cash, you can get really good terms like the deal you're taking lead on now. And yeah, that's exactly right. And it's interesting too, there's a lot more activity today than there was 5 years ago in the angel space. So there's more angel investors and there's also more startups. Entrepreneurship has become a very big force in the economy lately, and so it's sort of like a hot thing to do now. Like if you're a student in college, like you either want to go work for Facebook or you want to go start your own company. It's like, no one wants to go work for P&G or Goldman Sachs anymore, right? So but I think that's a good thing. Like there's a lot of good things that come out of the startup world.
Yeah, I agree. And so from the startup space, then you've got VCs or venture capitalists, which are, a couple million up to what, 20, 30 million.
Yeah.
And then from there you go public basically. So
yeah. And there's actually, a need for angels right now because there's sort of, because so many startups there's so many startups today, and venture capital, there's basically more startups than can be funded by venture capital today. And so there's a real need for angels to step in and really help fund the companies that maybe are starting to see some early traction but aren't quite there yet to get venture capital. So angels are kind of playing that huge, crucial role right now.
Yep. It's a good thing for the economy, for sure.
Yeah, definitely.
So where are you headed next, man? What's next in the life of Travis
What's
Nevitt? So I know he's been making big moves. I'll let you kind of explain what you're looking to do.
Yeah. So I wish I was traveling the world like you were. That'll have
You're
to
gonna come
soon.
meet with us.
Yeah. I'm gonna have to come meet up with Chris and Nikki on their adventures around the world. But I'm actually leaving the hedge fund world. I've left the fund just recently in the last 2 weeks, and so.
Which I find crazy, by the way, because most people, in business school or whatever would kill to do what this guy does. And he's got the risk tolerance to say, you know what, I've kind of mastered this space, or I've succeeded really well in this space, and I just want to take it to the next level. So.
Yeah, no, I mean, if I wanted to, keep a paycheck coming in, a nice fat paycheck, and living just a good, happy, fat life, it would behoove me to stay at the fund. But for me, it was just this, I had enough comforts, I had everything I needed, and at this stage of the game, it was like, there's never going to be a better time for me to step away. If I ever do want to go build a company on my own and try the entrepreneurship thing, now's the time. And so that's sort of where I'm headed. I'm leaving the fund world, and I want to go build something from the ground up and really feel like I've created something on my own, even if it fails. Just the experience of doing it, I think, will be hugely valuable. And it will help me too as an investor, as an angel investor, understanding the operational challenges of running a startup and being in the trenches with those guys, I think will be helpful. So.
And so in a couple weeks, you're going over to San Fran to get plugged in with that whole community. So
yes,
that's awesome.
Yeah, San Francisco, it's a great town, great city. So headed up there. That's sort of the ground zero for the startup ecosystem. We have a really great growing startup ecosystem here in Austin, and I hope to be back here involved with that as well. But I'm going to go for a couple months up to San Francisco. So if you're in San Francisco, let's connect. I would love to talk about entrepreneurship and about building companies. And
I'll link up Travis's Twitter, and hopefully we'll get him doing some YouTube videos, show you all the stuff that he does, because he really does some interesting things, and just his perspective on entrepreneurship and investing is like a 30-year-old should not know this stuff. Like, it's crazy.
Well, thank you, Chris. I appreciate that, man. Like I said, there's a lot of ways to skin a cat. Like Chris here has been an incredibly successful trader and has a feel for the markets that I certainly appreciate. That's a totally different way to think about it and analyze it, but is so effective itself, which is really cool.
It's cool to have the two perspectives, right? I mean, long term, I suck. I'm terrible. Like over 2 days, I don't know what the market's going to do, but
yeah.
I can tell you what's going to happen in the next 10 minutes, but that's about it.
And the funny thing too about that is that like a lot of times, like institutions like our fund, you've probably traded stocks that we've been in or that we've been trading that day. As we're like scaling in, and you're like maneuvering around us, like we're giving big trades to our trader and telling him to work it over, a 6-hour time frame, and you're like in there darting in and out, like,
we're trying to get the hell out of the way of you guys, man. Like honestly, I tell people, if you're trading the stock market, like unless you have a few $1 million, like stay away from the super liquid like Microsofts and Googles. Maybe this is a good question. What types of stocks are you guys looking at? You obviously look for liquidity, but what's kind of your sweet spot if you're gonna? And what's the typical investment? Is it $1 million, 10 million, 100 million?
Yeah. So for us, we were several hundreds of millions in size, and so like we had a minimum position. We didn't want to have anything less than say 2 or 3% position size, because then it's just what's the point?
Right.
It's not worth our time. And so. That's easily $5-10 million for for a starter position. So that kind of pushed us towards larger sort of mid cap and even large cap names. But we really love to find the stuff like we're not looking for the Walmarts and the McDonald's and the Microsofts of the world either. We're kind of trying to find those companies like Tesla or like Illumina or like and these are not investments of ours, by the way. I'm just thinking about companies that are doing interesting things, that there's a lot of change happening in their industry. You know, we spent a lot of time looking at the solar industry and the for-profit educations, and we've looked at the 3D printings and stuff like that. So, you know, that's really what we're looking for, is like, we're looking for like, where's there interesting things happening? Where's there a lot of potential for like change?
Just
in
big
the
growth
future?
potential,
Yeah, big growth
or
potential.
big crashing potential.
Yeah, exactly. That as well. So, you know, whether or not it's like Greek banks or something, you know, who knows?
Would you say you guys were mostly long or short biased, or a mix, or?
Definitely a mix. You know, we're probably more long biased, and that's, you know, that's you know, because that's, you make more money typically on the long side in the hedge fund world. The short business has gotten more and more difficult with short rebates going up, and anytime you find something that seems like a good short, everyone else piles in behind you if they find out about it, and so they drive up borrow costs for you.
And if it's too liquid, good luck finding shares.
Exactly.
And if you're in a bull market, there's a tremendous buying pressure. And
exactly right. Yeah. No,
that's why I like to short futures more than stocks, unless it's just a day trade. But
yeah, shorting stocks is a tough game to make money in. Like, so yeah, but it's funny, man, because, you know, there are times where an approach that would use the technical side and the fundamental side like would make a lot of sense. Like, I could think of situations where it's like, okay, some news comes out on a company in the morning, right? And the stock pops and there's a perfect setup chart for you to trade. But at the same time, like, I know fundamentally, like, this thing, hey, still has another 25% to go before it's even close to fairly valued based on the new news that's out or whatever. And so, like, it would be interesting to be able to have both, I think, like, to be able to say, okay, yeah, hey, not only am I going to trade this for the next 10 minutes, but I'm going to keep an eye on this chart for the next 3 days and look for opportunities to get back in. And
if I could just only know when all the big institutional money was going to flow in, that would be key.
Yeah.
Cool. Well, thanks, man. Anything that you would recommend for like aspiring traders or aspiring like hedge fund managers or just entrepreneurs? Any kind of words of wisdom?
Yeah, for sure. Well, always be like reading and trying to like learn more. You know, just be hungry for information. That's the biggest thing. So there's lots of cool books out there, like Market Wizards, that are like, you know, have interviews with traders and hedge fund managers that are really insightful to think about. But yeah, just stay hungry and never be. The markets move too much and evolve too much for you to like stay static. So you constantly have to be thinking about staying ahead of the game and staying ahead of everyone else in terms of strategy. So
yeah, I agree, man. I mean, what you worked even a few short years ago doesn't work for us anymore. We're constantly evolving. That's why we have our team of like coders and developers, and you know.
Yeah, that's right.
Good stuff, man. Well, thanks, brother, and best of luck in San Fran.
Thanks, man. You too. Best of luck traveling the world. I'm jealous.
Appreciate it. Guys, like up the video. Check out Travis's links below, and leave us a comment if you have any questions or comments. Share it up with your friends, and see you in the next one.